Welcome back. You're still tuned into Power Breakfast on CNBC TV 18. Well, we just spoke about important global cues and what happened in global markets over the weekend on Friday as well. Let's get in our research team now to tell us what the trade setup looks like, the stocks that are likely to be in the news and the action from the F&O space as well. What could the impact of the global movement be? Very good morning to all of you guys. Ekta, first up, let me come across to you. What is the market setup looking like today?
Hi, thanks for that. Well, yes, on Friday, the markets closed with minor cuts following what was a range-bound session. The Sensex fell over 200 odd points. The Nifty was lower as well. FII's net sold around 308 odd crores in Friday's trading session, and DII's net bought as well. US markets moved slightly higher on Friday. We have Asia, which is mixed right now. SGX, which is indicating a bit of a higher start. Brent crude, which was down for the second consecutive week, so just about below $75 per barrel, which is a positive. Now, in terms of the cues, despite what happened in terms of Friday's trading session and last week, it is a big week in terms of macro data. We have the India CPI data for the month of June, which is out today, and it is expected to be a sub 5% for the month of for the month of May, and that is expected to be at a multi-month low. So that is probably going to be a sub 5% figure. We have the US CPI data for the month of May, which will be out tomorrow and will be a precursor to the FOMC meet outcome, which is taking place this week as well. Remember, it is expected to be a hawkish pause, possibly a pause, by the Fed after multiple rate hikes which they've undertaken. Remember that they've been hiking rates for the first since early of 2022. There will also be the ECB meet, which is taking place on the 15th of June. So that is expected to be something that we should watch out for, considering that the ECB is expected to hike rates by around 25 basis points. So a lot on the macro front. Larger trend is that India last week recorded minor gains. We were up for the third straight week. We have a lot of stocks at fresh 52-week highs, such as Axis, Britannia, IndusInd Bank, IOC, Just Dial, Max Health, a lot from the broader as well as from the frontline space. And even for the US markets, they notched their fourth straight positive week. So the larger trend seems to be definitely intact for our markets.
Okay, all right. Thank you for all those cues, Ekta. Let's talk about some stocks in focus today. Vivek is joining us with that list. Vivek.
Well, good morning. Quite a few stocks on the radar on the back of multiple news flow that's come in, post Friday. First on our list, Go Faction. Now, what we understand from our sources is that there's going to be a very large block deal, almost 10.18% of the equity is likely to change hands. We understand that the seller is going to be Sequoia Capital, and the floor price for this particular block deal, is at a 5% discount to Friday's closing at 1,135 rupees a share. Total size of the blocks would be roughly around 624 crore at that particular rate. The other one on our radar is Titagarh Rail Systems, a significant fundraise being done by the company, fundraise via a preferential issue, and the company is looking to raise almost 288 crore from Small Cap World Fund at 380 rupees a share. Watch out for TVS Motors as well. Two separate news flow coming in there. The company's Singapore arm has gone ahead and acquired an additional 25% stake in Swiss E-Mobility Group, and after that, Swiss E-Mobility Group will become a fully owned subsidiary of the company. Separately, the company has also gone ahead and done a fundraise in its NBFC arm, that is TVS Credit. The company is going to issue almost 1.52 compulsory convertible preference shares to PI Opportunities Fund, and this is for a total investment of around 480 crore. Watch out for Cochin Shipyard. Company is declared as the lowest bidder by the Indian Navy for upgrade of an Indian naval ship. The estimated contract value is around 300 crore, estimated duration of 2 years. Lastly, Info Edge, a news flow coming in where the company has gone ahead and sold its entire shareholding in a company known as Happily Unmarried Marketing Private Limited. This sale has been done to VLCC Healthcare via both a mix of share as well as a share swap. And the cash consideration for this particular deal is at close to 61 crore rupees.
Okay, those are a lot of stocks, Vivek. Thank you so much for joining us with that list. Let's talk about the F&O space now. Nigel is joining in with all the cues from the F&O markets. Hey, Nigel.
Well, morning, Sonal. The markets have been seeing some bit of pressure at high levels. We're waiting for the fresh all-time highs, but it seems there are a couple of hurdles as we get there, which is par for the course, I would say. In terms of Friday's trading session, there was some unwinding of long positions, both on the Nifty as well as the Nifty Bank. And if you're looking at the FI numbers that came in the FNO market, well, that perfectly ties in. They unwound close to around 7,000 contracts. The short positioning now moves to around 54%. You'd like that number to move up a little bit, getting into a big event. That's the Fed meet later this week. Then, in fact, if they deliver what is expected, maybe you'll see a bit of a short covering rally. In terms of the index options, well, they bought more calls than puts. But what's telling you at higher levels, we're likely to see some bit of resistance is the way they're writing calls. And even in Friday's trading session, they wrote more than 2.4 lakh calls. That's in the ratio of nearly around 5:1. And what were they writing? 18,600, 18,700 call, both of them very active. Between them, they added close to around a crore shares odd. So there was writing at both those two strikes. And on the downside, in case things go wrong, in case you get a shocker from the Fed, maybe you get a couple of negatives that come in there, then there appears there is some lower level put buying, but that's just a protection buying. The PCR we highlighted a few days ago, it was hovering around 1.35. That's come down to around 0.8, which is good news from a bullish perspective. I think we're fine, as long as we hold on to the 20 DMA, so that becomes your first level of support. Resistance, though, comes in at higher levels. The SGX 50 suggesting a green start. I don't think you go ahead and jump in and buy the start. You wait for a bit of an intraday dip, and you look to get in, and your stop loss will be the 20 DMA. So keep an eye out on that 75 points bump up. I don't think you chase that. But if you get an intraday dip, maybe you look to get in and keep your stop loss as well, and hope that, in fact, you see that move towards all-time highs. Back to you.
Okay, all right, Nigel, Vivek and Ekta, thank you so much for joining us and prepping us up for this trading day ahead.